Thank you for joining us on our home equity webinar today. So for a home equity loan, it's traditionally a second mortgage structured to allow homeowners to gain access to their equity without refinancing their first mortgage. Today I have with me Renee Fairchild. She is our mortgage expert here at Oklahoma Central, and she's going to be able to answer any questions that anyone may have. And she can definitely also someone from her team if you ask any questions in the chat box. I don't want you to forget that's down there. They'll definitely be able to help you with that. So on what is a home equity loan? Well, as we know, it's a loan that's traditionally a second mortgage structured to allow homeowners to gain access to their equity without refinancing their first mortgage. Also, the current first mortgage rate environment and current economic conditions have increased overall first mortgage interest rates. This makes it difficult to refinance, pull out cash as it would require an increase in a rate and payment of loan fees. Another thing too we want to look at on a second mortgage is loans do become more popular when the mortgage rates are higher, and it makes no sense to refinance those first mortgages, especially for those of us that right now we have out there our first mortgage have 2 and 3% on them right now. We definitely don't want to mess with that interest rate. So buying a home is an investment in your future, and that's something a lot of us do when we buy a home. This is one of our biggest purchases we've made and our largest assets. Homes traditionally build equity and value over time, unlike a car that depreciates over time. Equity is created in your home and it appreciates and your home balance declines. Renee, what do you have to say on for this slide of it for us learning about for exactly on the first one and the second one and the differences on with our mortgage rates and things like that?
Well, exactly. First mortgage rates have been increasing so much that it hasn't been very beneficial for most people to refinance currently, because when you refinance, in most cases, there's a lot of closing costs involved in that, and you're rolling that back into the loan. So that, of course, the interest rates being usually double what you currently have on your first mortgage, you can then now pull out the equity out of it. And of course, on both of our products, just kind of a little jab there, we have a no closing cost program.
Ooh, that saves a lot of money. I hate closing costs.
And we can discuss a little later on how we can determine how much equity you actually have.
Oh, perfect. So the purpose of equity loans, some are purpose of it for is for debt consolidation. I know it can be a number of different things. You'd like to take out a home equity loan can assist in consolidating the high rate of debt. If you have credit cards that are that high, over 20% interest rate, just a number of different things. And there's no prepayment penalty, allowing the homeowners to pay off the debt quicker than it would have been to have been originally paid off, saving thousands in overall interest cost and creating additional monthly cash flow into the household. Equity is created when your home appreciates and your loan balance does decline. So that's really neat, the graph that we have here to show them how they're able to do that too, to be able to save some money.
And I will elaborate a little bit more on that graph and kind of spell it out a little simpler. Say, for instance, if you do have about, let's work off a dollar amount and maybe 60,000, that you're able to pull $60,000 out of your current home as a loan. Currently, that would be at 7.99%. And the most you can borrow is on a 15-year term. If you were going to pay off debt of, say, $60,000, whether it be auto loans, credit cards, school loans, or whatever type of loan that you have out there that you want to pay off in the amount of $60,000, then and your payments totaled $1,300 in that, and you took that out, your new fixed equity loan amount would only be $573 a month. So you would actually be saving $727 a month by borrowing the $60,000 out of the equity of your house. Therefore, you're saving that difference of $727. You could use that money for savings to put aside, or you could be using that $727 to pay extra on those payments to pay them down faster.
Oh, I like that. That's a lot of money, especially with that milk's up to $6 a gallon right now. That is a lot of money. Also, purpose for home equity loans and home improvement is home improvement. I know right now I see houses going up different places and people are doing different things. Kids are leaving for college, number of different things, starting to remodel their house. So a home equity loan can assist in refurbishing or upgrading your home with landscaping, kitchen, bathroom models, additions, carpet paint, HVAC, storm shelters, generators, etc. that we may need, especially with the storms that just recently rolled through and people
Yes.
being without power for so long. A generator really is nice to have. This investment can sometimes add value to the property, but more importantly, reinvestment into the property helps if you should decide to sell. It can also help make you stay there longer or shorter, and it can make your stay more comfortable when we're
Most definitely. We are seeing lots of people do the HELOCs, the home equity line of credit for the home improvements. That's more a route to go, we see, than probably the fixed equity, because you can borrow up to a certain amount, be approved for a certain amount. You don't have to take out the full amount, but you just borrow on that line of credit as much as you need at that time, and you're paying it off as you borrow it. And we'll talk about more what the difference between a fixed equity and a line of credit is. Just know less people are selling their homes right now, and more are fixing up their houses and various things, and staying in their home for that reason. Just one thing to let everyone know is, if you are borrowing for home improvements, do not start those home improvements before the loan is closed. Because when an appraisal is done or market value is done, they go out and take a look at the house in most cases. And if those improvements are halfway through, then they have to be completed before the loan can close. So do not start the improvements before.
Okay, so because if they start them before, they wouldn't even be able to get the funds for the loan
Until that was
afterwards.
completed. Yeah.
Yes. I think you and I had a conversation about this 2 years ago when
Yes.
we actually did that on ours and bought property and started building and didn't have a loan. So
Right.
yes, you definitely want to make sure that can save a lot of
Yes.
headaches for someone.
Yes.
Now, purpose of home equity loans for college expenses. We all know it's coming back at that time. Either we've got kiddos that are heading off to college, or you've got kiddos that are starting that senior year or their junior year, and we're looking to see where it is. And we know college is expensive. Education is expensive. But one of the nice things is that utilizing the equity in our home can also help with those expenses. Anything from books, housing, tuition can be covered. And also, it could be a better option. This is also a better option than using a high interest credit card, or of course, we don't want to get into our retirement, or taking out that high rate of a student loan. That's one of the things too.
Oh yeah, we're seeing more and more people do that, and their kids not having these student loans, and so that it's quite expensive when they actually graduate and try to find jobs and stuff, and then they're stuck with these high rate student loans. And even though they've been on deferment for a while, they are going to have to pay them back, it looks like. So
yes.
Yes.
I know. I have one right now that's doing that. And also,
Yes.
this isn't about the home equity part, but if you do have a kiddo that's about to graduate, or they're in their undergrad program in college, we offer a scholarship program here at Oklahoma Central that we just got done awarding our scholarships. We awarded 25 $2,000 scholarships out. So that's also something to look at, to look around to be able to help with those costs.
Definitely.
So other uses for our equity loans. I love when we were able building this and got to this slide to talk about it. Of course, unforeseen medical costs, as we know, with insurance companies, co-pays, what's covered, what's not covered. You can have your medical bills just be off the charts before you even know it sometimes. And so some people will go ahead and take out an equity loan for their nest egg to get that started or to help add to that. Also, if you wanted to do it, depending on what the rate is and what you have going on, vacation of a lifetime, to be able to take that out for it. Or if you have any life events, weddings that may be coming up or anything like that, which they are expensive, you can look at that if you would like to. Or if you're in a position where you're starting a new business and you're needing that startup cash, you can use the equity in your house for that.
Yes.
That's so interesting.
Yes, we don't go into a lot of detail of what you're using it for. It's just, it's your equity out of your house.
Oh, well, that's also nice to know then. Now, the differences between the home equity loan and a HELOC, home equity line of credit. HELOC loans are a variable rate tied to the index, and funds are available when you use them. And then the home equity loans are fixed rates, and you receive all of your cash up front.
Yes, and the one thing to know is if you do not have a first mortgage on your current home, then you do not have the option of a fixed equity. You have to choose a HELOC loan. That is your only option. So just keep that in mind when you're making a decision on which route you want to choose. If you do not have a first mortgage, then the HELOC is your only option.
Okay. Well, and I know several people that do have HELOCs, and one of the things I really like about it is if they don't need the money, they don't use the money and have to pull it off or anything. It's just nice to have that back there knowing they have it if they were to need it.
And you're only paying interest on what you've borrowed.
Oh, that's even better for it.
Yes.
So Oklahoma Central Credit Union Home Equity Loans. So on our home equity lines of credit, our HELOCs as we like to call them, they have so many amazing features and benefits with it that up to 95% of your home's value.
Yes.
And then we have the promotional rate of the first 6 months. I love the no closing cost, especially with the market that we're living in, the economy we're living in right now, is to be able to do that and not have a closing cost. This is one thing. So we have the maximum loan amount is $150,000 on it, but you have 5 years that you have a period that you can draw upon that, and then a 10-year repayment period. We also have the variable rate tied to our prime, and monthly payments are interest only. And then the benefits that we have for this is the ability to access equity when you need it. Serviced locally with all of our locations that we have, all the things we're able to offer online, different things like that. We make it very convenient for our members to be able to do a home equity loan or a home equity line of credit with us. Quick loan turnaround with our team. You guys are great on that. And you will have, if you were to choose to do this with Oklahoma Central, you'll have your own loan person that's walking you through the process the entire time. You're not going to be passed off from one individual to another individual to another individual. That's something that's really nice. And also no prepayment penalties. That's a big for it. And lower rates, and of course our credit cards. It can possibly be a tax deduction. We would definitely consult your tax advisor first before that, just to make sure that it does fall in that category. And there's also potential to boost your credit history and good options for your home improvements if that's the way you choose to go.
Yes, that's exactly. One thing to say on the HELOCs, the first 5 years is your drop period, and you can pay the interest only during that time. You can pay extra along that way if you want to pay extra to pay it down. But after that 5-year drop period, then you go to making principal payments on that. And it does have a 15-year amortization on that.
Okay, so I'm going to ask this question. So you may laugh at me, you may not. So they have their first 5 year, their drop period, but during the rest of that, are they able to draw during that if they need to?
Not the remaining 10 years. Okay. If they choose to want to draw after the 5-year, then they would need to come back in and see us and renew a HELOC, get another HELOC. We would pay that HELOC off and renew under the new terms currently.
Okay, perfect. So on our fixed rate for our home equity loans, for our features are your choice of your loan at 5, 10, or 15 years. Again, no closing cost, obtain your cash all at once, and you get to borrow 95% of the home value. Our benefits to this is the rate is fixed for the life of the loan. So you don't have to worry about that rate changing if you get it locked in at that rate. Again, it's serviced locally. You're going to have your own private banker to be able to help you with all of this. Our mortgage experts are great at walking you through all of the process of answering any questions you have. We have a very quick loan turnaround time, no prepayment penalties, lower rates than credit cards, which is nice. I did see the other day that credit card rates are going up more. And again, we would definitely want to check with our tax consultant on this, but a possible tax deduction on it. And again, it's a potential to boost our credit history. We're getting really close to wrapping up our webinar, so if you have any questions at all, please don't forget you can ask those in that chat box and we'll be happy to get back with you. Now, how to apply? You can definitely do it by going to our website, and it walks you through on these steps what to do once you get to the website, or you can even call and at extension 380, someone will definitely be able to help you. We really appreciate everyone that's joined in for our webinar today. Now, on our required documents, and this is our last slide of it, we're going to be wrapping that up. So if you have any questions at all, please don't hesitate to go ahead and hit them up in that chat box, since this is the last slide for our webinar today. Required documents that you're definitely going to have: your first mortgage, current loan statement, the last 2 years of your W-2s or 1099s, last 2 years of your tax returns, all pages of your personal and business if you have those available to you, and then 1 month of paycheck stubs and proof of homeowners insurance that they'll need from you. And your team goes over all the different things that they need with everyone,
yes.
don't they?
And everyone has a few little things that might be a little different in their situation. Yes, and feel free to give us a call at any time to go through your scenario in particular, and we will run the figures for you on your particular case with your mortgage balance and your estimated value, and we'll be happy to figure what your equity is in your home.
That's fantastic. I love that they have their own person to walk through everything and do all their stuff. And because we're here locally, it doesn't take us long to get everything turned around. Is there anything else you would like to add for anyone that may be joining us today that we maybe didn't think of, or just a quick, helpful, useful tip for anything?
Of course, we're always available. Another extension that you're welcome to call is 480. Of course, 380 is available, but 480 is another extension. And you're always welcome to call myself. I am the mortgage manager, Renee Fairchild, and I'm always available to talk through any scenario that you have. And just consider looking at the debt that you have a lot of times on these credit cards, because they have been increasing considerably. And you would be amazed at what you could pay off with and even pull out of the equity of your house, and how much it would save you a tremendous amount, and what cash flow it would free up in your monthly budget.
Oh, wow. I love that. That is so interesting, especially right now where people are looking for any extra ways to be able to having any extra money disposable. Well, again, if y'all have any questions, please don't hesitate to reach out in our chat box. We'll be happy to get back with you. Thank you so much for joining us today for our webinar, and thank you for being patient with us as we've had the technical difficulties we've had when starting this morning. Thank you so much, and we hope that everyone has an amazing afternoon.
Thank you.